everyone, and welcome to the Jenny and Ryan Show. Thank you so much for joining me today.
Thanks for having me.
We are so lucky to have Ryan Grace, our crypto expert, on today while Liz is on her cruise. Liz called me while I was on my way in, and she is sitting on the beach or sitting in a cabana.
That sounds nice.
Trying to enjoy herself, but when the spoons were down 70 or 80, it was a rough start. A rough start to a day.
It's tough when that's on your mind.
Well, thank you for coming on.
Thanks for having me.
I know Liz had you on a couple weeks ago when I was on spring break, and she said there was just so much information you never even got to it all.
Well, we'll get to the rest today, hopefully.
Right. So I think there are so many of our viewers who just don't know too much about crypto, but we all want some or have some, and even our young kids, like our kids are more into it than we are. But right now in my account, I mostly just have Ethereum and Bitcoin for the most part. And I transitioned a lot of that into IBIT. And I've heard, good and bad about IBIT, but I thought that was a better way to improve basis and still participate in crypto. But I don't know, what do you think of IBIT? Because I heard Tom and Tony kind of like, I don't know if they like it or as much, or if they just are long the crypto instead.
Yeah, absolutely. I mean, I think it's a fantastic way to get exposure in your portfolio beyond just holding spot cryptocurrency. With IBIT and a few of the other ETFs, you have liquid option markets as well, where at least today in the US, you don't have liquid options markets or really options markets on the underlying spot cryptocurrencies. There are options on some of the futures, but with IBIT, you talked about reducing.
Having the platform so people can take a look at it.
Yeah.
SPOO's only down 33 now, so
bouncing back,
right? So IBIT, this is as far as products to trade. This is one of them I have been trading. I know the SIBO has some new products too. Some Bitcoin products that follow Bitcoin ETFs, but this, as far as if you're going to trade options on a crypto, which one do you usually go to?
I would go here, given that IBIT is the BlackRock Bitcoin ETF. This is extremely liquid. You look at this space and the ETFs, the Bitcoin ETFs, after they launched in January of 2024, quickly became the biggest commodity ETFs in the space, I believe surpassing GLD and assets under management.
Oh, really?
So these have been extremely successful, extremely liquid. If you look at, we open up the April expiration here, I'm seeing 2-cent wide markets. So I think these are as liquid as you can really get. And this is something that you're going to see, a significant amount of volume in on a daily basis. Quite often at times when I'm on the show with Nick and Mike, we'll reference this, and the ETF volumes for Bitcoin will be greater than the SPY at times. So it's extremely popular product to trade. And like you mentioned, this gives you the opportunity to sell cash secured puts, maybe run the wheel strategy or reduce your basis with covered calls. I think this is a great way to get exposure if you aren't just holding spot crypto.
Now, when I switched over from the actual crypto products to IBIT, I thought of it like, and I think a lot of people have a hard time, and is why I think a lot of people are more in Ethereum. I don't know if they say more in Ethereum than Bitcoin, but when you look at our crypto products and you say, oh, I'm going to put $10,000 into something, I think when you look at Bitcoin and you're like, oh, I'm going to put $10,000 into it. Okay, well, then I have like such a small piece of a coin. I don't even have a quarter of a coin or half of a coin, where if you put $10,000 into Ethereum, well, then you get 5 coins. So thinking of it that way, like, okay, I have $10,000 to put into this. I wouldn't even have a whole coin. Maybe I'm better off going over and just selling the equivalent to $10,000 in puts at the money puts every month in this. And so this is what I've been doing in IBIT, instead of having money in Bitcoin, just having the equivalent in IBIT, which has been a lot better this year with the fall. It's helped quite a bit. But then on the way up, you don't participate if there's a massive run up. But if someone were to do that, do you see with the margin here, it's only $1,800 for $4,700 in notional value. So if you're going to put $10,000 in crypto in Bitcoin, you would really only put sell two puts as far as notional value goes but it's only using 3,700. So if someone said, like, I want to put, 10,000 into IBIT instead of 10,000 into Bitcoin, would you say look at notional value, or would you say look at what you could do with margin here?
Yeah, I think you would look at it from the capital efficiency perspective. There's probably two different schools of thought here, at least as it pertains to Bitcoin. If I'm using a product like IBIT and I'm trading the options, I'm certainly more concerned with, I suppose, the capital efficiency that I'm going to gain there, and then some of the strategies that I'm going to be able to use. Whereas on the other side of this, people have a view where I want to own Bitcoin, I want to hold it for a 5+, maybe 10+ year period, and in many cases, I want to take control of it myself, and I want to hold my own keys because at the end of the day, this is something that's untethered from the existing system. It's probably similar to a perspective that people have on gold. There are some people that prefer to hold physical gold in their own safe, in their own house, I suppose, or in the bank even. But there are also people that want to just get that exposure and trade options on paper gold via GLD or other products. With IBIT, you do not actually have a claim on the underlying Bitcoin, whereas if you own Bitcoin, you are in complete control.
So when you say have the keys, have your piece, have the keys, and just hold on to that, that kind of leads me to, I know we have the crypto wallet, right?
That's right.
And I don't even know, and I should know, but I think a lot of our viewers out there don't know what is the difference. What is the difference of having some Bitcoin here in the platform or having a crypto wallet and having it in the crypto wallet?
Yeah, the big difference there is going to come down to who the custodian is. And I don't think it's a right or wrong. I wouldn't look at it that way. It's more so just a preference. But when you have crypto that's held through tastytrade with Zero Hash, they're the custodian.
Oh, so Zero Hash is the custodian.
Yeah, they're going to manage the wallets, and ultimately they're going to be in control. And I think this is relevant to people when they look back at some of the things that have happened in the industry. It's still a nascent asset, but you've seen over the last few years the FTX collapse, where FTX was literally doing whatever it wanted with customer funds, with customer crypto. We've seen exchanges that have been hacked at times. And so because of that, and given how this technology works, some people prefer to be in control of it on their own. And I suppose there are risks associated with that as well. But the way that I would kind of think about it is really just the difference between you have money in the bank or physical cash in the bank in some capacity, or you hold it in a safe in your house. Self-custody with crypto is going to be like holding it in a safe in your house, trading it through an exchange, or using a centralized custodian in that sense is going to be like keeping it in the bank.
Now, I know with Tasty and other brokerages, they're FDIC insured, and you have X amount of dollars that are insured. Is that the same with the crypto in Zero Hash?
It's not. And so that is something to be aware of.
That's something that people might not know. People think like, oh, I have this Tasty account and it's insured.
You're placing a lot of trust.
Dollars are insured.
Exactly.
So
you're placing a lot of trust in the institution.
So then when you buy the crypto using this platform and it goes through Zero Hash, it's held by Zero Hash, and that's not FDIC insured.
It's not FDIC insured, but there is that cash balance against it that you purchase the crypto with. So crypto today, when we look at Bitcoin and we get back to why might IBIT be attractive for some traders versus just spot crypto, it's not going to be marginable, and it's just held, as cash secured in a sense. 1 for 1, I buy $50 worth of Bitcoin. There's $50 of cash that's required to buy that $50.
And that's held.
And that's going to be, it's all on chain. So it's all through a wallet, but it's going to come down to who manages that wallet or who ultimately has access to it. Because with those keys, you can sign transactions and you can move that crypto.
And you say keys, but what do you mean? So, and I know you have the, like the Tasty wallet. You can pull up the Tasty wallet, because I wouldn't even know. Okay, so I have money in Coinbase, and if I wanted to switch my crypto positions from Coinbase to the Tasty wallet. How simple is that to do?
It's really easy to do that. Coinbase will allow you to withdraw crypto or deposit crypto in the same exact way that you can withdraw or deposit cash. And so if you wanted to send that to a wallet address that you control through a piece of software like tastycrypto, Coinbase has its own wallet. There's others out there like MetaMask. You can do that. And then you can also, if you want to fund your Coinbase account or your Tasty Trade account, you can send crypto to those institutions. So that's another feature that's available through Zero Hash, but through Tasty Trade, where let's say you go in here and buy crypto and you want to move it somewhere, you can do that. And
So
I guess that's...
I can do that. I can move it. I can go into my Tasty Crypto wallet and say, move this from Zero Hash over if I wanted to.
Yes. And vice versa, you can move it in. So if you have Ethereum, you have Bitcoin, and soon, if you have US dollar stablecoin, which we can talk about, you can fund your account with that. Maybe you want to just hold it and see it all in one place. Or maybe you want to sell that crypto and use it to trade with or to trade other securities with. You can do that as well. So that is something to point out when you go back to what are the differences between this ETF, which does have options on one hand, is marginable, and is going to be maybe a little bit more capital efficient. Well, it's just not real crypto.
It's not, okay.
It's
just
crypto
tracks.
exposure.
It tracks crypto.
Yeah. The fund holds crypto. It's going to move one for one. There is going to be a small fee associated with that, like there is with most ETFs. But when you own the crypto or are in control of it yourself, you can send it wherever you want. You know, that IBIT position, you can't send to your son.
And I can't buy something with it.
Right.
Right.
But with Bitcoin, you can, or Ethereum, you can do that.
Okay.
So there's that kind of transfer.
And so we have
capability.
IBIT, and I think there are, is it MBTX? Is that? Yeah, so you see these, I don't know if you're familiar with these new SIBO products. So MBTX is the SIBO Mini Bitcoin, SIBO Mini Bitcoin ETF, which also has options. There's no bid or ask here to buy or sell, but it tracks Bitcoin.
Okay, so this is going to be more of like an index where you have options on the index, but you can't necessarily buy the underlying index itself.
Yes. So, so this is one of their newer products. So they've got a couple newer products that also track crypto.
Yeah, I think it's still very early days. You're going to see the maturation of the derivative space here in the U.S. You know, the U.S. has been anti-crypto for a few years now. Starting to see some things slowly shift. I know the narrative has changed, but there's not much else that's actually occurred kind of on the regulatory front yet. I think that's coming. And so once there's rules and a framework in place, I think it's going to be off to the races.
Now,
And you're seeing some signs of it already with Coinbase even mentioning that they're in talks to acquire the biggest options exchange that's outside the U.S. It's called Deribit. That's where everybody actually trades, except it's not available to U.S. users.
okay.
So if that were to be something that coupled with a regulatory shift and a big options exchange through an exchange such as Coinbase, I think you would easily see options on maybe physical Bitcoin even here or spot Bitcoin here in the platform.
And so what is Deribit? It's an exchange?
Deribit is the biggest options exchange
For the crypto world?
for crypto.
For
yes.
crypto.
Yeah, there used to be exchanges back in the day where, let's say that I held Bitcoin or Ethereum at Coinbase, or I held it in the Tasty Crypto wallet, or today through Zero Hash and Tasty Trade. I could send that cryptocurrency to another wallet address at these options exchanges. They've since pretty much gone away in the US, but they were available for a little bit of time. I could send that crypto to these exchanges, and then against that, I'll call it physical crypto. It's obviously all digital, but against that spot crypto position that's held on chain at this wallet address, I can sell options against it.
Against it.
And it wasn't cash settled necessarily, but it was cryptocurrency settled. So it would sell out of my cryptocurrency position, or if I was selling a cash secured put, I would take...
Then take more.
Absolutely.
So it would work just like calls and puts work the same.
Yep.
But you have to put, and people only have long positions, right? You're not allowed to have a short position.
That's right. The only way to short this is through futures markets or perpetual futures markets, but there's no real structure or mechanism in place to short the spot cryptocurrency.
So will that drive up the price? Like, let's say I put in my crypto position and I'm only allowed to sell calls against it, and then that will take some away. Or if I sell puts against it, I'm just getting more and more and more. If it goes down, I'm just getting more and more and more. Will that eventually drive up the price that people can't short it, that they really can only be long it?
No. So I would argue that that you really can short this, and it's shorted quite often
With options.
in size with futures.
With the futures.
Yeah. So we're always focused as U.S. investors from that U.S.-centric kind of perspective on these spot crypto markets. But by most estimates, around 80% of crypto trades outside of the U.S. And it trades on perpetual futures exchanges, with the biggest exchange globally, far and away, is Binance. And so while we're kind of in our own little world in the U.S., this is a global kind of internet product in a way.
And when you say global, where though? Because is it more Asia or more, like where? Because I don't know. So my husband works for a German company, and I've gone out with some of the people there, and they're not, the people I talked to weren't like that on board with it. And they're dealing with so many other countries, and they think, yeah, it would be great to have one currency that we could deal with, but they think Bitcoin is too volatile.
I wouldn't think of it, well, there's lots of kind of unpack there. In terms of where you see trading volumes, globally, US is going to account for a huge amount of volume in certain areas. Europe, obviously, Asia, of course. When you see this in other countries, think frontier markets or emerging markets, you're seeing a lot of signs of growth there as well. This is certainly beneficial to anyone that lives in a country where you're the victim of hyperinflation and the debasement of currency. And I would argue that that happens just about everywhere, as well as the U.S. here. But you look at Venezuela, for example, or you look at other countries where you've had some runaway inflation. This is a hedge to that. And I think, you look outside the U.S., there's clearly demand for dollar-denominated assets, for U.S. dollars, and this makes dollars much more accessible. And so it truly is a global, decentralized marketplace, because when you think about what crypto is or what Bitcoin is, it is a value transfer layer on the internet. In the same way that the internet is a communication layer, evolved into a commerce layer, is now evolving into this value transfer network or layer. And so that makes it accessible to anybody, in theory, with an internet connection. It's not necessarily easy to convert fiat currency to cryptocurrency everywhere globally, but it's a lot easier today than it was 10 years ago or 5 years ago, and I think it's only going to get easier.
And when we have, like, if I go to our crypto here and we have this long list now, and this is great, we have so many. Do you think people are still just really into just the big original Bitcoin, Ethereum, or are people really starting to invest more in all these other products?
So what you're seeing today is, if I look at something called Bitcoin market cap dominance or Bitcoin dominance, it's 62%. So today, Bitcoin's market cap accounts for 62% of the total crypto market cap. Now, that might not be every single token, but the majority of the tokens where there's some activity, there is some market cap that's tracked. So just going off of that metric alone, given where we are possibly in the broader cycle or just the market conditions that we've seen, there's a bid for Bitcoin, and you can think of that as the beta versus meme tokens and other things that, there's questions around whether this is real, isn't real, in terms of, is it worth anything? So I would consider that something that's probably similar to, okay, you're getting into investing for the first time. Most people will probably say, look, buy a broad-based kind of basket of equities, the S&P 500 ETF through the SPY. Or you can go way out on the risk spectrum and buy a biotech company that's going through some phase of a trial that, could be a binary outcome. That's kind of how I would think about crypto. So for most people, they're probably starting with Bitcoin. Maybe they learn about Ethereum afterwards. And then some people go out and get a lot farther out on the risk spectrum. But I think most people are probably in Bitcoin
Just
to start
sticking
with
the two. So I have a son in college, and him and his friends, they don't have a lot of money, right? So they're all in college. They work all summer. Maybe they make $3,000 over the summer, and they want to take some of that and put it into crypto. And when you think of that, and if they're 21 years old and they only have, $500 to put in, they probably look at Bitcoin and think, I'm going to have such a small percent. What can I really make on this investment? That's why I think those cheaper coins are attractive to them. But would you still say maybe they still are better off just putting it in Bitcoin?
Yeah, I think over the long run, I mean, just my personal opinion, and my portfolio reflects kind of what you mentioned earlier, where it's going to be probably 80% or so, if not 90%, Bitcoin, Ethereum. I have some Solana. And then you got a small, as we like to call it, bag of these other tokens. I wouldn't think about it in terms of the nominal price. I would think about it more in terms of volatility. And the reason why is because you can come in here and buy $10 worth of Bitcoin. It's fractionalized. So your returns are going to be based on the percentage return of Bitcoin, whether you hold 10 whole tokens or cryptocurrencies or cryptos in that sense, or you have, 1/1000th of one, whatever it might be. And so then when you look at the selection process, it comes down to, do you want, what flavor of volatility do you want? If Bitcoin's vol right now is, if I'm going off of
Here I can take a look at IBIT, right? Because that.
Yeah, you can use IBIT. That'll be a good proxy. I'm looking at the Deribit volatility, which is derived from that options market that I referred to.
Well, where do you find that?
That's something you're going to have to just Google, or you can look at through like a trading view or a coin market cap. So there's a lot of sources for data, and we're working to pull more of those data sources into the Tasty Trade platform over time. But just to reference that right now, I've got a 30-day implied that's annualized at, we'll call it 53%.
Okay, and I see the May options and IBIT are 57%.
Yeah, so. Perfect. So they're all going to be relatively close there. That said, a lot of these much smaller market cap tokens, micro caps, if you will, we don't have implied vols to go off of. But if we look at a 30-day realized, we're talking about something that can trade at 160, 200%. They're much more volatile to the upside. Obviously, they can only go to zero, and quite often they draw down 80, 90%. But I think that's what's attractive to people. It's not so much how much of it can I buy, but if my view is that Bitcoin at 80,000 can maybe go to 150 or 160,
sure.
Okay, so I have 100% return. Great. That's amazing. But when you stack that up against things that could go up 400, 4,000%, at least they have historically, I can understand why people are interested in some of that stuff. That's a hard market to trade because obviously if you move that much to the upside, you have 100% downside volatility in most cases.
Right. And like XRP, you had all these people on the XRP bandwagon. I heard of so many kids, they're all buying XRP.
The volatility is insane in there.
Right. So it went from 30 to 80 to $2, and now it's just been sitting here for a while, hanging out in this area.
Yeah, we've been trading sideways right at kind of the bottom of the range here at about $2 or so. But this is something that quite often trades at a plus 200% realized vol on a monthly basis. So it can be a lot of fun.
And do you only get into those if you're not planning to buy and hold, if you're planning to keep scalping in and out, to get in and out? I know so many people who every month they buy X amount of crypto and their plan is to just hold it and never sell it. But I like to have extra where I can get in and out and scalp it. Do you think most people just buy it and hold it? Or do you think you know people who are trying to just constantly get in and out?
I think that the majority of people, at least as it pertains to Bitcoin, and I guess that's another thing that we should probably talk about, is the difference between you kind of put Bitcoin in this bucket or category, and then you have all these other things called altcoins. But I think a lot of people have a long-term view on this as a long-duration asset, as a technology investment. That said, there's not going to be a ton of winners, I think, over a much longer time frame. We've seen Bitcoin emerge, Ethereum,
Most will
Solana.
just go away.
Yeah, and it's not that there won't be challengers and other technologies that potentially emerge. We're seeing that today. It's just that everything that launched, let's say 5 years ago, isn't necessarily just going to go up over time. And we see that with some of these narratives that come and go very, very quickly. Meme coins, for example. Doesn't mean that they're dead or that all of them aren't going to, or that they're not going to come back, but I don't think all of them are. And so that said, it is tough to take that long-term approach to an asset that has a 200% realized volatility. So you need to be aware of that. And then in that case, you're probably going to be better off if you're just trading them.
So
but they're very hard to trade too.
Right. Right.
These things pump and often dump, and maybe they come back, maybe they don't. But timing is everything in those markets, and there is an informational edge, I would argue, and you have to get that through these Discord servers or Telegram groups and chats.
So I don't know what I saw, something on Pepe. So I thought, oh, fun, I'll buy some of this. But that, because you see, it's like you can buy
a lot of it. Yeah.
A lot of it. But then I had gotten the message that it was set to closing only. And you say if you ever see that message set to closing only, it's because the market's too wide or not liquid enough.
So I think what happened there with tastytrade specifically is that as we were adding a bunch more of these tokens, the first thing that we have to do is get this set up in the platform. We've got to make sure that the data feed is working. And so we ran into just a couple of bugs.
Okay.
And so that's why it was set to closing only. But all of these that are, all these on the list now are tradable and active. It's just whether or not you want that insane volatility, which can present fantastic trades at times, but also can be, extremely challenging to kind of think about.
And those are just more like lotto tickets. Those aren't investing in crypto in the long run. I feel like if someone's going to go buy something that's 0.000007 cents, it's more of like a lotto ticket.
I tend to think of it more as a short-term trade. That said, Doge has been around for a very long time and is actually, I'll have to look at the numbers, but was for the majority of its lifetime a better performing asset than Bitcoin. So had you made the investment in Doge, you'd have made more money or had a better percentage return than in Bitcoin. But that said, it's also extremely difficult. How do you put context around some of these price moves, or how do you approach the market with perspective, something that can go up 500%, right? It's always easy to look at these charts in hindsight and, look at how much Bitcoin went up. But very few people bought it in the very early days, and then held it to 100,000, right? I mean, for most of us as traders, if I put $5,000 into something and it went up 100% in a couple of months, I'm probably taking profits, not knowing that it's going to go up thousands of percentage points over the next few years.
True.
And that said, you had to really withstand and stomach 80% drawdowns quite frequently throughout its lifetime. So it makes it challenging and kind of gets back to maybe more of the attractiveness of it as a short-term trade. But for Bitcoin specifically, people do hold this for the long term.
Now, why would you say you're more likely to put money into Bitcoin than Ethereum?
Well, so I have a large Ethereum position personally as well. I think you have to look at these as different things. Bitcoin has an element of scarcity to it. Bitcoin, the analogy, is much more like digital gold and is an asset that's completely detached from the current financial system. Could it be used as money? Sure, but most people don't use it as money in the same way that they don't use gold as money. I think you have to look at Bitcoin, even though it's called a cryptocurrency, you have to think about it as a commodity.
Even though there's gold, there's a set amount of gold, but Bitcoin, people still continue to mine it. But
mathematically, there will only ever be 21 million coins that are created through that mining process. So there will be a point at which there's no more mining. Now that's a long ways out into the future, but every 4 years, the difficulty increases and the reward that you receive from mining is cut in half. That's called the halving.
Oh, that's the halving.
That's the halving. And so it is disinflationary over time when you think about the supply growth. At one point, the mining reward, let's say, was 50 Bitcoin. Very, very profitable endeavor. Gets cut in half, 25, gets cut in half, 12.5, et cetera, et cetera. And so that continues every 4 years. That's mathematically going to occur. It's programmed into the code. So it won't exist forever in that sense. So there is that degree of scarcity. And there are deflationary or disinflationary components to Ethereum, but I don't think that Ethereum is truly a kind of hard money or hard asset in the same way that Bitcoin is, given its characteristics.
Now, my cousin's boyfriend set up her basement he bought all these systems where it was like, I don't know what he was paying for them. I can't remember if it was $10,000 a system or $30,000 a system. And he had all the systems and the fans and everything in her basement, just constantly mining and mining and mining Ethereum, which was great, working out great for a while. For a while now, are people still doing that?
There are probably few individual miners. I'm not saying that there aren't any. I think I saw something the other day where someone actually received the whole block reward for mining, which is probably unlikely for most people. But you're competing with massive companies now, massive server farms that are able to generate electricity through renewables at a lower cost in some cases. And so it's just become much more competitive as it's become more challenging over time. And really what you tend to see post-halving events is a further consolidation within the industry of the large miners that exist, because it ultimately becomes more expensive and certainly becomes difficult if the price goes down. I would equate this to, even though it's digital, I mean, it's very similar to drilling for oil or mining for gold. There are certain setups that work very well when the price of oil is $120. But if the price of oil is $30, deep sea offshore stuff doesn't really work. And I think it's comparable in some ways to Bitcoin mining.
But there are still some kids. A friend of mine, her 10-year-old, he mines Bitcoin at home. And so if he's 10 and doing that from his computer, and he has his computer mining Bitcoin, how much Bitcoin is he really getting from mining it at home?
I honestly don't know. Yeah, I'm surprised to hear that. But yeah, I don't know.
I don't know. Him and his friends, they're into it. I guess it gets them involved and gets them into crypto.
Yeah.
Now, can you show me how to set up a wallet and where to go? And for our viewers, if they want to set up a Tasty wallet,
yeah,
how
absolutely.
they would do that?
So if we have the ability to throw up the mobile app view here on the screen, I'm not sure if we can do that or not, but if we can, then I can display the tastycrypto app and just walk through the wallet setup process. It's super simple. This is not something where you're opening an account. You're downloading an application and you're going through a couple onboarding screens, and then you're basically writing down what's called a seed phrase, setting up a password. I would think about the seed phrase as like your combination.
What is it called?
To the wallet. It's called a seed phrase or recovery
How do you spell
phrase.
that?
Just seed, like plant a seed in the ground.
Seed.
Yep.
Okay, seed phrase.
Yeah, or recovery phrase. And so this is something that you never want to share with anybody. Anyone that has the seed phrase could then import the wallet address, take control of it through any piece of software like tastycrypto. Tastycrypto is like a web browser for the blockchain. If you have the seed phrase, you are then in control of the crypto. You can send it wherever you want. You could steal it from somebody if you had their seed phrase.
And so Liz had Ethereum somewhere a long time ago, and then one day it was just missing. Does that make sense? Like, could you have it ever?
It's possible that
this was a long time ago, and when she logged back into her account, it wasn't through Tasty. It was with another carrier, and when she went back in, she couldn't find it.
Okay. Yeah, I'd have to know more about it, because just sometimes the way that these pieces of software work, it's not that it's lost. It's just that for you to see it, you have to then re-import that seed phrase. And I think, and we can talk through this, but what's initially, people kind of have a hard time wrapping their head around is that this is decentralized. So this exists on the internet in a way. You can think about it as if it exists in this decentralized cloud storage. It's not like it's through Google or Amazon and you log in with a password in order to access this. There is a password for the software, but that just simply unlocks the software and then allows you to view something that exists on the blockchain network, that is that internet decentralized cloud. So there's no password recovery. There's no way that someone can help you if you forget your seed phrase.
Oh, really?
That's where some of the risk on the user side comes in.
So if I forget my seed phrase,
If you lose your
there's
seed
no one to
phrase,
call.
there's nobody to call.
And there's no reset my password.
That's right. And to some people, that's attractive because it, again, is truly detached from the existing system that we know. But with that, there is a degree of...
That seems crazy. Do you know how many times I forgot my password?
Right? So you really have to be aware of that. And that, again, might be one reason why, okay, I just want to trade my crypto through tastytrade,
I was
Zero
going to sell
Hash.
puts and IBIT.
Yeah, or Coinbase, right? It's a lot more convenient. It's a bit more user-friendly, arguably. But these pieces of software, what we have up here on the screen, the Tasty Crypto Wallet, have gotten so much better over time.
And I am trying to collect coins for my kids. Like, oh, I'm going to get this much for each kid. And whenever, at some point in time, when they're trying to buy a house or whatever, they could cash them in. And so would this be a good place to put those where I don't want to touch them or do anything to them or just leave them?
Yeah, so I wouldn't even think about it as you're putting it in here. What
Because
we're
it's
looking,
not really in here. It's just
that's
in the
right.
blockchain.
What I'm looking at here is just a view into what exists on chain. And so this application is going to give you the ability to view the assets you hold across multiple blockchain networks. So you can see your Bitcoin position, but that's a completely separate blockchain network than Ethereum.
So this just accesses the blockchain.
Yeah, I would think about the blockchain as the internet and this piece of software as a web browser.
So when you're using this browser and you want to buy and sell, it's not buying and selling through the browser, it's buying and selling.
Well, that is a good question. We do allow you to do that. And that gets us into this concept of decentralized exchange, which I can show you and walk through here. We can go there first if you want, or we can talk about setting up the wallet. The wallet setup is super simple.
And you said you just download an app.
Yeah. Yeah, you just download the Tasty Crypto mobile app. This is available for both iOS or Android. So you go to the App Store, you download it, and then when you open it up, it will ask you whether you already have a wallet address. And if you do, that's the seed phrase. So do you have a wallet? Do you have the seed phrase? You have probably written that down. Some people will memorize it. It's 12 words. You import that, and that then unlocks the ability for this piece of software to...
Wait, did you say 12 words? Mm-hmm. So you just make up your phrase and you never forget it?
You don't make it up. It's derived from the process of creating the wallet address.
Okay.
And so that'll be presented to you, and you want to write that down. Now, there's no risk then, because that's really not any different than, okay, you've created an email address, and I guess with that you have a password, but you're not doing anything with it yet. The risk increases once you've actually moved crypto assets to that address. Now, because if I lose the seed phrase to an address that doesn't have anything, no big deal. But you have $100,000 on chain and you don't have your seed phrase, then if you were to ever get locked out or misplace it or whatever, lose your phone, delete something, whatever it might be. And I say it as if it's like really scary. There's a lot of solutions and ways that this has improved. So you could store your seed phrase in the cloud through your Face ID. So there's a lot of ways that it's become more user-friendly, but a lot of people have such a concern over security that they would never store it on the cloud, even though Apple might be a trusted institution in that case. You still might not want to do that. So it's all kind of up to the user.
They laugh at me out
preference.
there because I don't store my passwords. I have a notebook of passwords, and I have them all written down. And they Jamal and Tony, they all laugh at me out there when I have to pull out my book of passwords.
Well, if you were to lose that book of passwords somehow, right? I think the probability is low. So you could do that. But then, that's just where I guess you don't have that financial risk, where here you could do that. But if someone were to get a hold of that and then realize, oh, that's a seed phrase for crypto wallet, they could just, as long as they have access to a piece of software, which is free, access to a web browser, they could then get in control of this. So there's just some risks to be aware of in that sense. It doesn't make it a bad thing necessarily. It's just you need to be aware of it at this stage.
So what is the difference between this and Coinbase?
So the difference between this and Coinbase itself is that Coinbase is a centralized exchange. This is a self-custody wallet where you're in control of the assets. This gets back to that comparison between the bank and the safe at home. This is the safe. Coinbase is the bank.
Okay.
And that's the same thing that's true when you look at tastytrade. and tastycrypto. tastytrade is going to be powered. The crypto offering is powered through Zero Hash. That's just like Coinbase. They're in control of the wallets. They manage them for you. Now, we don't think that they're going to steal all the money, but that was something that we saw previously with other exchanges.
So if I wanted to put my crypto into a safe, I go this route, where it's somewhere on the blockchain. It's on the blockchain, and this is how I access it.
Exactly. Just like if you wanted to bury your gold bars in the backyard, you can do that too. I know this is kind of a crude analogy. And if you forget where you buried them and you lost your treasure map, then you're never going to find them, sort of thing.
So
but this is all digital in that sense.
So what will happen is the people who, let's say someone has this and they die and nobody knows how to get to it. What will happen with all these accounts that are out there? Yeah,
unfortunately, it's lost. And so when we go back to the very early days of Bitcoin, when it wasn't worth anything, and certainly no one could probably have foreseen it being where it is today. You had people like, you've got that pizza story where someone bought a pizza for however much Bitcoin, and it became the most expensive pizza purchase ever. That said, you also have a lot of people that just misplaced the seed phrase, which at the time they might have had thousands of Bitcoin that were worth less than a penny. So it didn't matter. But in hindsight, it clearly did when Bitcoin's gone to 100,000. So there's a guy in the UK that threw away a laptop that had a wallet on it, and the only way to access that wallet was on that laptop. It went to a landfill. It's estimated that that laptop has $2 billion of Bitcoin on it. It's estimated that...
And are people trying to find it, like finding a treasure?
I believe he's been working at this for some time. I think he's raised money or has spent millions of dollars trying to find this laptop.
Really?
Yeah, I don't know the details. It's one of those stories.
On the laptop.
Yep. And so there's a lot of that where, unfortunately, it's like, okay, if the price of Bitcoin never went up in dollar terms to where it is here today, that would be less relevant. But because it has, it's extremely relevant. It's unfortunate. But it's estimated that a couple million coins are just unrecoverable. So we go back to the idea that there's only going to be 21 million. Well, we have about 19 million or so, over 19 million that are in circulation in terms of supply today. And it's estimated that a couple million have been lost. So we're kind of running up against that cap already. But yeah, that is something that can happen, has happened. But as this has evolved, and Bitcoin came about first right around 2009, post-Great Financial Crisis. So no one knew what it was going to be, but it's become very robust over time as a result. But there are people that have lost tokens, unfortunately.
Well, I remember when Tom and Tony bought Bitcoin for $800, and then when it was $4,000 or $5,000, they wanted to sell it, and they had to hire someone to try to get it off their computer or to find it so they could sell it.
So there is that, but and that was probably back, I'm guessing 2015, 2016, somewhere around that, given those prices. And so the technology, the user experience has gotten so much better over time that there's a lot less of that today. So
you open this up, it's like the safe for your crypto, and how do you transfer everything in?
Yeah, so let's say that you don't have any assets in here. It would show a balance of 0, and I can do that really quickly if I just go to wallets. This is going to allow you to manage multiple wallets within a single application. So let's say we want to add one. Here's what I was talking about earlier. You can import an existing wallet. So I've got a seed phrase from another wallet.
So the only way you would have multiple wallets is if you have multiple seed phrases from different places.
You can create an unlimited amount. And the other way to think about this is like an email address. And I say that because on your phone, you could have Gmail, you could have Outlook, you could have Apple Mail. They could all be pointed to the same email address. Same thing here. I've got 4 or 5 different wallets, or software applications is probably more appropriate, on this phone that can point to the same wallet address. So Coinbase has its exchange. tastytrade has its kind of pseudo exchange via Zero Hash. tastytrade has a wallet. Coinbase has a wallet. Robinhood, you can buy crypto through your Robinhood account. They have a wallet.
Okay, so you can import all the wallets here.
You could use any one of those pieces of software. It really comes down to what feature set do you prefer, what experience has that company built. And that's why I'm really proud of what we have here. We're working to build an experience that's tailored towards traders, to people that are familiar with investing apps, obviously, versus a lot of wallets are kind of like a checking account, kind of balance management. application.
Right. It just I get it.
So this
show
has
me
a lot of
some the
features.
features.
Yeah. So let's say that you had, you can go and again create a new wallet.
'Cause right now, all I have is Coinbase. Other than my positions in my Tasty account, I only have Coinbase. So show me some of the features here that we don't have at other places.
First and foremost, well, some of the things that we have that don't exist in other places are going to be this markets tab. So we have the concept of a watch list here with a self-custody wallet. We've got this feature that I love if you want to find out more about what's going on in the market. Let's say we want to look at Bitcoin news. This is going to be a lot like Instagram or TikTok. I can start to scroll through here, swipe up to read. It'll open up the article. And you can see if I want to jump to Solana, it's going to load the news for Solana.
And you like Solana. Why?
I do. Solana is a high-performance blockchain similar to Ethereum. So we talked earlier about Bitcoin, putting that in its bucket. Think about that as digital gold, buy and hold it for the long term. What do you do with it? Well, you can transfer it. But largely, it goes up when the fiat currency it's priced in is debased. So this does well, really, really well, when interest rates are zero and the Fed's buying a lot of bonds. We're not exactly in that environment, but the regulatory environment has shifted, and we have the ETFs for capital flows now, so it's benefited from that. Ethereum, Solana, many others are programmable. So they take some of the functionality of Bitcoin as a technology, and you can build applications on top of them. In addition to just being able to transfer, applications can run without an intermediary. That's where we get to trading and swapping on chain. Solana does that, but does it a little bit faster, a little bit cheaper. There's trade-offs there, but that's one of the reasons why people like Solana, because it's maybe a little bit more scalable at times than at least the Ethereum blockchain itself.
Okay.
So you've got all the prices.
So do you think
in
only
here.
one of them will survive in the end?
No, I think you have a world where you likely see different use cases across different blockchain networks. You're going to have extremely high performance blockchains that are great for games, video games that run on those blockchain networks. And they don't have to be as secure. They don't have to work in the same way that a blockchain that's going to be used for, call real world assets, tokenizing treasury bonds or credit instruments within the financial system is going to be used. So I think they're going to be different use
Solana
cases.
is good for people who are gamers?
Solana has been really good for trading. So what you've seen recently with the launch of all these meme coins, all this activity, these AI agents, it's been on Solana because Solana has been able to support that in a way where it would be very expensive and a lot slower for Ethereum's blockchain to do. Now, there's some nuance here because there's a lot of other chains that are called layer 2s that are very similar to Solana but scale up Ethereum. But when you just compare Ethereum, layer 1, Solana, layer 1, Solana is a higher performing chain, higher transaction throughput, lower cost versus how Ethereum works. That's not a knock on Ethereum. Ethereum secures a lot more value than Solana, but in some ways, different use cases are kind of emerging.
Now, did you ever think when you came here to Tasty that you would become our crypto expert?
No, but I said this to Liz as well. I think what's happening in this space, and it's not a single token, it's not Bitcoin or Ethereum, but when you look at blockchain, you look at this paradigm shift that's somewhat underway or has been, I think this is one of the biggest macro trades in the same way that AI is a big macro trade or mobile computing was a huge macro trade, which led to the, all these applications. I think that's what you're seeing here. And so I've always been attracted to kind of those longer term macro trades. And as a result, really kind of got into the weeds here. But yeah, I mean, when we, even when we started, I mean, none of this stuff didn't exist.
Right.
What we're talking about today, some of it might not exist, and there'll be new things to talk about in the next couple of years.
And I think when we got Ethereum and Bitcoin on this platform, do you remember how long ago that was?
We launched through Zero Hash, I believe in February, launched spot crypto trading, February of 2021.
Okay, and I'm pretty sure Ethereum was right around this price.
Yeah, so that's a knock on Ethereum for sure that the industry has where the trading range has been around 4,000 to 2,000 here. I see that we're under it at the moment, but it hasn't necessarily performed over that same time frame the way that Solana or Bitcoin and others have. But this is something too where everyone should keep in mind just how small these assets are, and that's why they're so volatile. There's not a lot of liquidity on the upside. That's really the thing to be aware of. It's when these things go up, there's no sellers.
Right.
And that's why the volatility is positively correlated most of the time with the price. It's completely the opposite of what we see in the S&P.
So I'm sure our viewers would love to know, well, they're always looking for what to invest in or something new and up and coming that we don't know of or haven't gotten into yet. But you just think crypto in general is still new and up and coming. I mean, it's been around for so long, but it's still got so much further to run.
I think, generally speaking, it's still an early stage technology investment. It's a long duration asset. It's becoming more and more coupled with what we see in traditional markets. The correlation on a 3-week basis right now, which is obviously extremely short term, but is about 90%.
And for the people who are afraid of it and think oh, I don't want to touch crypto, what do you say to them?
Oh, I think, you've seen the volatility dampen over time here. I look at Bitcoin as just, again, a tech stock, really. Its volatility is quite often lower than a lot of the companies that we're trading options on.
And that's a good way to put it. Think of it more as like a tech stock.
Yeah, I mean, we have a vol of, what'd you say, 57%?
57%.
So somewhere, the low there, the IV rank low for the last year is probably close to 40%.
Right, and you look at
and the thing is,
Tesla has an implied volatility of, Tesla has an implied volatility of 80%.
Yeah, and that's because it's going down. What you're often going to observe in Bitcoin or any other crypto is that IV rank of 100 is not when it's going down. It's when it's going straight up.
Right.
These are things that can have massive moves. We've modeled some of the historical drawdowns, and you can see something that materializes very quickly, down 20% in a week, 30% correction. It can evolve into a 40, 50% down move, but it goes up much more often by more in terms of the magnitude than it goes down.
Now, do you look at this down move as a buying opportunity?
I think this is a correction. Yeah, absolutely. You quite often in prior cycles have seen very frequent 30% drawdowns. Those are the corrections. That's not a bear market necessarily in something like Bitcoin. So I think that you're still structurally long-term within this bullish trend. You obviously have these short-term kind of cycles that you go through. We are seeing the same thing in all other areas of the market, right? This is an environment where we saw basically a growth scare pop up at the beginning of February, and we've traded accordingly, right? And you can see that too in other areas of the market. Treasury yields are falling. Gold's at an all-time high. Now, I get that there's the crypto gold analogy, but in this case, crypto is a high beta tech stock. NVIDIA is getting crushed. Tech is down. The Mag 7 has been destroyed. There's a deleveraging that happens, obviously, when volatility picks up across portfolios.
And I can see what Liz was talking about. She had you on for an hour. She said there was so much you didn't get to.
Oh, we didn't even get to the markets.
We're already out of time. And I never even asked you about Coinbase as far as this is a product that there's a lot of premium in the puts in Coinbase. I like selling puts in Coinbase, but I've taken quite a bit of heat lately. It's had quite a fall. What do you think of Coinbase as, just for us as traders? I don't like to sell calls in here, but I do like to sell puts in here. But what do you think of Coinbase?
Coinbase is levered Bitcoin. I think about Coinbase this way. We'll go back to the gold analogy. You can invest in GLD, or you can lever it up and you can invest in GDX gold miners. You really want to lever it up, you can invest in GDXJ, the junior miners.
Okay.
Some of those companies could easily go out of business. I'm not saying that about Coinbase. But Coinbase isn't crypto. It's correlated to Bitcoin. It's going to go up a lot more when Bitcoin goes up. It's going to go up or down a lot more at times when it goes down. Okay. That said, it has company-specific risk, right? It generates its revenue from trading volumes. Trading volumes at times can fall off a cliff. We've seen that happen here in the market for crypto. I mean, Bitcoin's been stuck at 80,000, hasn't moved over the last couple of weeks.
Okay.
They are diversifying their revenue streams, which is very interesting. But I guess high level, the way to think about this is just if 55% implied vol or even realized vol for Bitcoin isn't enough for you, get yourself some Coinbase. And you could trade the options of this. And this was a proxy for a long time. Maybe less relevant from an options trading perspective as a proxy in a world where you now have very, very liquid IBIT options.
Right.
But that's how I think about Coinbase.
Got it. Well, Ryan, thank you for joining me. I'm going to go out and download the app. So I search, what do I search on the App Store?
tastycrypto.
tastycrypto.
Yeah, it should pop up.
I'm going to download the app and I'm going to get my seed phrase. I'm going to write it down in my book of passwords.
That is dangerous. I would write it down somewhere and store that somewhere. Other things people do, write down 11 of the words and remember that last one.
Oh, clever.
So yeah, I would just...
See, that was a good tip. That was a good tip.
You do have some money on this, though, and you just have that written down. Like, who knows if someone finds that? But
thanks for joining me. Wallet. Thank you, everyone, for tuning in today. Tune in tomorrow. I have Dr. Data coming on. We're going to be going over the back testing feature, and I have quite a few trades that we're going to be back testing tomorrow. So tune in tomorrow. Ryan, thank you so much for joining me today. Everyone, remember to trade small, trade often, laugh with us, learn with us, and watch the Liz and Jenny Show. I'll see you tomorrow.